Okay, and we're live. Roy, how's it going?
Well, I was just telling you, Tevis. You tell me how is my day going?
Your day sounds more hectic than mine, man. Uh, Real life problems. Meanwhile, I'm just staring at a computer all day long.
Yeah, portfolio wise, stock market wise, big surprise for a lot of people today, myself included. Although there were hints last night when we opened up the overnight action, we're for sure going to talk about that. How are you doing?
Yeah, pretty good. I was just telling Roy backstage I've moved like 10 feet all day long because I'm working from home today. Um, I got a whole bunch of meetings, and this is my favorite one of the day.
All right. Well, glad to hear it. And yeah, thank you for being willing to move up Bootleg a day for my meetings that come tomorrow. So we
Dude,
appreciate that.
Tanner calls me at like 10 a.m. today. And of course, I'm in a meeting, and so I hang up and I tell him like, "Hey, I can't chat." And he's like, "Call me the moment you get out of the meeting." And lo and behold, like 30 minutes later or whatever, like I get out and I call him, and he's just like, "Dude, are you looking at NBIS?" And I'm like, "Yeah, yes, I see it." And he's like, "I wrote covered calls. I don't know what to do." And he's like, "It just keeps going up." And I'm like, "Dude, I don't know." He's like, "Do you think it's going to go down or?" And I told him I was like, you know what? I think around 175, we should see some resistance. And he's like, 175? He was like panicking. He's like, what should I do? Should I roll them? Should I keep them? Like, I don't know, man. You got yourself into the situation. So,
I've got some of those too. So yeah, mine I rolled out to 145 next Friday. So those may be gone. I'll roll them out. If I have something that's very deeply underwater, if this keeps going up, it will be. I'll roll them out twice, and usually after that, if it keeps getting deeper, it's usually not worth playing catch up. At least that's how I play it. But yeah, let's start there with Nebius. We'll for sure want to talk some macro, some of SoFi's news, which on the surface it looks like a yawner. It's really not. And of course Q&A as always, guys.
yeah.
So why is Nebius doing this? Well, is it just because Tanner wrote covered calls?
Well, yeah. So I made this post earlier today. I don't know if you saw it or not, but this is my generic canned response. It's a templated response to everybody who's asking why Nebius is going up. It's up 43% of the past month, just broke through all time highs. It has over 20% short interest, guys. This is a short squeeze, in my opinion. And I think that explains a lot of the volatility that we're seeing in the move. Of course, as you got new all time highs, you get price discovery. As you get price discovery, you have a whole new set of investors who are buying for the first time. If you look at the price action, we can go into the price action actually.
Yeah, let's do that. I don't know, want to talk about what you're doing, how you manage a position when it comes. It's your number one position, like
It is, yeah.
how you manage about that psychologically. What you would say to those like myself and Tanner who have covered calls underwater. And there's some bearish things out there with data centers too that we need to talk about.
Yeah, I mean, look, if you see Nebius here, one thing I notice is like you have these morning pumps. Like the moment it opens, it just rallies up, rallies up. So you can see like every single morning, more or less, it's rallying up, which to me signals some like maybe institutional volume or some big accumulation where the moment the market opens, we just get huge spikes in volume. Look at these spikes in volume here, right? Right at the open. And then it's fairly flat, relatively speaking, throughout the day, but it's just stair stepping upwards. And so that's what leads me to believe, Roy, that it might be something to do with like short covering or institutions. We did get several price target upgrades as well. I think we got two price target upgrades for Nebius earlier today, and one of them was
I saw this.
Bank of America, which recently put their price target on Nebius, and then they came out like a week later and they raised it again. I think their price target on Nebius was 150, and they just raised that price target again. Goldman Sachs, yeah, so 150 to 175. Here we go. I got a post here from the one and only Nate. So here you can see the price targets for Nebius. And as you can see, Goldman Sachs updated their price target from 160 to 205. B of A from 150 to 175, and Freedom Capital Markets from 108 to 154. The consensus across analysts sits at $184. Nebius is currently, well, $154 right now. So less upside for sure relative to when this post was made uh, earlier this morning, but it's still very bullish because analysts are expecting big things. And so I think like once you reach this price discovery phase and you get all these analysts upgrading their price targets, like you're going to attract a whole new tranche of investors that are buying for the first time. I think it was Amit was saying like he made a post today and he was saying like he trimmed some at like 105 and he's letting the rest ride. But he also said he's like, I wouldn't be buying here at 150. And I think that's true for a lot of us, right? Because we were buying at 70, 80, 90, whatever. But there's somebody who just discovered about Nebius, their entire existence. They just discovered about it today because it hit their screener.
Yeah.
150 is the price that they found it at. You know what I'm saying? Like they haven't had this opportunity to follow it while it's down into the $80 range. And so regardless of if it being up, what is it like 76, 77% year to date, something ridiculous like that. I think that, people are more bullish today than they were in the 80s or 90s, even though it's like almost double from there. And that's just human psychology. It works the same way for many, many names.
Okay, let me ask you two questions on this too. We're going to spend a little bit of time on Nebius because I think it's very important. And this man, by the way, real quick, we do have one that you starred, but let's go ahead and ask that real quick. Speaking of price targets, Skalaman said, Tevis, you're going to have to revise your 2026 Nebius price target. So what are your thoughts here based on this price action, based on any news as well? Do you do that? Do you just say, hey, I'm just going to stick with what I got?
The classic analyst move, just like, oh, Tevis Capital revising price target upwards. No, I mean, look, when I made the $200 price target, it was based on what I think they're going to achieve this year from a fundamental perspective. I think that is still on track. I mean, when I made the price target for $200, Nebius was trading for like $80 a share, something like that. And I mean, this is similar to, when I was talking about the price target for SoFi, right? At $27, $28. It's like, yeah, sure, it hit it in 2025. Right now we're back to $16 a share. So it doesn't necessarily mean that like, oh, well, we're going to blow right through 200 and go to 250 and I should like ride it up or down. Like we have a long way to go in the year. And Roy, this is why we need to clip segments, man, because if you'll remember a few bootlegs ago, I was saying as a response to these people asking us questions around like, do you think we'll ever see SoFi at $20 again by the end of the year? It's like people have short-term memory and they're so driven by recency bias in the market that what did I say? I said, guys, we're still in the early innings. We're 3 months in to a 12-month year, right? And so it's like, yeah, sure, we could see 200. I personally think Nebius is going to overextend here and then spend a little bit of time catching its breath. As to where it stops, I think it's going to be around 175-ish, and then it's going to chill out for a little bit. But it could blow right through that. It can go straight to 250. It could go back to 100. Like, who knows, right? My point is like, don't let the recency bias, whether it's going up or down, dictate how you should feel about the stock for the year. So $200 still stands for me. I'm not going to be chasing it up or down. Very confident that it'll hit that price, not necessarily that it's going to close at that price, but I think there's a good likelihood.
Okay. Second, and appreciate the candor of that response. You hit the nail on the head with these analysts. And one thing we have to be careful of is just because it says B of A, if you earn a name where it's like these guys are bearish, they always get it wrong. There's many different analysts that work for each of these firms. So you can't just say these guys are just price target chasers because it's really up to the individual. So the price target upgrades, is there a basis for that beyond, and of course the excitement of retail? Obviously, price action does have an impact, especially on the retail side. But is there something that's actually changed beyond macro stuff that we'll talk about in a moment over the last, let's say, month? Because we were like a month ago, like I've almost doubled my money in Nebius. It's like, okay.
Yeah, there's a couple of things. I mean, in the past month, we've had the $27 billion agreement with Meta. We've had the $2 billion investment from NVIDIA. And so we've had news since GTC that really is fundamentally bullish for Nebius. Bank of America's raise, I believe, was on the back of CoreWeave, believe it or not. CoreWeave signed a deal with Meta, and Bank of America is just more bullish on the sector in general. And so they raised their price target across the board. But there has been news. I think so much of the hesitation, Roy, was around capex spend and demand falling through the floor. And even though this news is just announcement that's at this point, it's not like we're getting more revenue in the door for Nebius. We're getting promises of future revenue. I still think that we're rallying off of it. The reason is because it alleviates that uncertainty around demand falling through the floor, right? If Meta says, "Hey, we'll buy all the extra capacity that you have," and NVIDIA is investing money, and all of these companies are making similar agreements, well, then you're confident moving forward because it alleviates one point of uncertainty for you.
Yeah, that makes sense too, and it's just hard to know. Like it's really bullish. I think when analysts will keep price targets steady even when the prices fall on something, like they actually have a conviction in it instead of just trying to chase the price target and look good or look less bad. And we've seen that with Nebius. It was trading, at like $70, and it's like, okay, what in the world? At that point, like if you recall, like you had pounded the table so long on Nebius. I was in it before for a swing trade, but I'm like, I got to get back in. And these prices, I don't know where the bottom is, but this feels silly. Now, on the other side too, I really want to be a Nebius long term, kind of like Tanner, or I'd prefer to have those covered calls be safe. But bottom line is, I can't be like turning up my nose at a double in a month or a month and a half if we look out another couple of weeks with the current environment where we're in, where there's so many different targets as far as opportunities in the market.
Yeah.
For earnings season, we're here. Of course, all the hyperscalers report and talk about their massive capex spend. It's always fun when you're in that space. Like for me, NVIDIA, Air Test Systems, you hold Air as well. Nebius has some big ramifications. Is there anything this earnings season from Nebius or from the broader reports, like TSMC actually already reported, that you're actually looking for or you'd love to see? Any bold predictions there?
I think what I'm looking to see is more updates around the progress that they're making with regards to data center expansion, because they have big expansion plans for DCs in 26, and a lot of them are expected to go live at the end of 26. And if that's the case, well, we're past the permitting phase and we should have started to break ground at this point. And I know that's the case for some DCs, but others, it's a little bit more uncertain. Of course, I think demand is going to be a big topic. I think Arkady is going to have his templated answer to that one, but it's going to have repercussions because it's probably going to raise their expectation for ARR for 26. Remember, Roy, when they said we're booked for half of 26, they said this like November, I want to say, or October. And that was really bullish. But right now, I would not be surprised if they're fully booked for all of 26 and talking about what demand looks like for Q4 to Q1, 27. So I think those are the two big pieces. If we get another hyperscaler deal or something, an expansion in their partnership, I wouldn't be shocked to see that as well. Quite frankly, here's what I think is going to happen over the next week going into earnings, and maybe they announce this at earnings or a week after earnings. Basically, in the next month, I expect them to have more dilution. I don't necessarily think they need to, but I think they still will take advantage of the fact that the stock has rallied so much and issue some more shares. We'll see if that does come to fruition, but we've seen many companies. I mean, even Air did it last week, right? The moment
Yeah,
that a company
69.
rallies in a big way, they'll issue shares and they'll dilute and they'll raise money.
What's fun is when they issue shares and the stock goes up anyway, because it's like, okay, especially in the current environment. That was there. Chris, it was going to be a 3% dilution at that, and now it's like a 2.6 or something. But yeah, if it helps them scale, like that's the thing is CapEx is not a negative as long as it's used wisely. And so that's why management leadership is so important, just to see like, are they actually building something that is going to be accretive? Is it going to help EPS? Is it going to help them accelerate revenue, take more of the market share? If not, like they're buying private jets, like classically Clean Spark from a couple of years ago, that's a good sign to maybe look for the exits there. So speaking of exits, there's a question, and I think Matthew Johnson's, I'll just ask his at 614. Is Nebius going to be a cornerstone to your portfolio? Do you think that it's a data center play or more than that? I think that they'll become more than just a data center play. Let me answer real quick because my answer will be shorter. I would love it to be a cornerstone, but the reality is I'm underwater with these covered calls, and it's all my shares are actually underwater. It's not just some. I had a nice even amount, and that's what's happening. So I do think that I'll get an opportunity to either get out of those covered calls or that it'll retrace, or like there could be a point in a scenario where we're looking another year down the road where everything else has kind of caught up, where Nebius does its thing where it smashes all-time highs and then it consolidates, and I'm like, okay, now it's actually a screaming buy again, even at a higher level. So I would love to. It may not be. It's all about the neo cloud, though. Like most of these data centers are focused on just the bare metal right now, and there's a market for that, and there will continue to be. But that doesn't really give you much of a moat other than price. And Nebius, time and time again, has showcased their ability to build that neo cloud to make it very compelling for the long term future. We'll have to see how sticky it is. Because right now, even if they just did bare metal, the market would still be excited about that. But for you, Tevis, that's a harder question maybe because it's not just your number one position, but like if it keeps going this direction, if it hits 175, it's overwhelmingly your number one position. So how are you playing this? And is this a cornerstone for you? What are your thoughts? Can't hear you.
I think I'll definitely need to trim at some point or another. I don't necessarily want any position to be like 50% of my portfolio ever again. That sounds cool in principle, but in reality, my portfolio looks a little bit different than it looked 5 years ago in terms of the size, and it's just kind of scary. I'm looking at my P&L for Nebius, and I'm up like 77% on it on like my entire position. So if I look on a book value perspective, like Nebius is much less than the book value of SoFi, but because it's rallied so much, it's the number one position. It's about 33% of my portfolio right now. And so, look, I think it will be a big position. I don't know necessarily that it'll stay as the first. But what I will say is that it's very volatile, and I want to be more aggressive in capturing profits along the way. And maybe it might be as simple as like, oh, you get a double, you cut your position in half, and you let the rest ride until eternity, until you need that money again, because you're just playing with house money, and you reinvest the principal elsewhere, right? So that could like that's something that I've done with previous names that I hold in the portfolio. Is the moment I get a double, I just sell half and I just take out my own, principal. As a With regards to Nebius's ambitions, I want to throw up this post. This was from the CEO in a recent interview that he did, where he basically was asked around, how people should be thinking about Nebius, and he said, "quote Think of Nebius as a fourth hyperscaler. You do not achieve that by acting as a hardware wholesaler. You have to own the whole stack." And he was talking about the layer cake that Jensen had laid out for AI. He says, "We build it ourselves. We design our own servers and racks. This allows us to bypass middlemen and capture that margin ourselves." So we can expect more vertical integration from Nebius the more time passes. This is from their software side of things with Token Factory and inference in general, and all the way down to their data centers being wholly owned by Nebius. As we know, their ambitions to own more data centers as opposed to lease them, with their new ones being built, right? So as you think about that, you're going to get margin expansion as you go down. If the demand is in fact as strong as it's showing to be right now, the early indications are, you can expect this to be way higher than we are right now. Like, people see it as a multi-$100 stock, like 150. Wow, that's so expensive. But in reality, this is what, under $40 billion market cap. It's
Yeah,
not that
and
big when you
and
consider
this
how big AI is, right?
and this is a huge space. Like inference, there's people out there that are saying, well, things are going to become more optimized and efficient, and that's absolutely true. And Nebius is actually a part of that. Token Factory, for instance, is just one of several things that they're doing. There will be a push in that, but also when you do have a lot more efficiency, when it becomes actually cheaper, it goes back to Javon's paradox, which is the cheaper something gets, the more it's actually used, which actually increases demand. And I still think the market is understating the demand and need for inference just at an incredible rate. Like, it's just bulls 6 months ago who were saying extreme things with inference. That's now looking bearish. That's how fast it's accelerating. This is just one of those things that Manuel had this really good post. He was one of I'm just gonna say he's the OG in Nebius. I'm sure there's people there before him, but he was calling it from like the teens, basically. Brilliant account. But I actually didn't know about this connection. So I've seen a lot of posts on X recently on Higgsfield AI with video content. A lot of it's promotional content, and you'll see a little promotional thing at the bottom. But the AI is terrible at like the dialogue and plot and everything, but it's visually very impressive what people have been able to create and put out. And this is an excellent post. I'm not going to read all of it, but there's a good interview here too on why they chose Nebius over the other GPU cloud providers. Like this, there other people are saying, "Hey, what's the next Nebius? Are there other opportunities out there?" And yeah, like I think inference is a space that's going to do very well. But there's a reason why Manuel, there's a reason why Tevis, there's a reason why myself had chosen Nebius, and it's not because we like the ticker or the name or Yamaguchi Paruski. It's just because they're building something that has an edge, and they've been able to do that for a long time. They execute very well. It's a very clear vision of what they're building. We don't have to guess with these guys, and time again, people continue to choose them. So, yeah, I'm very excited by them. I would love to have this a long-term position. If it gets away from me, I'll cry with my double. But
yeah, and look, I think if you look at the capacity that they're doing right now, it pales in comparison to the capacity that they are guiding for 2030. Some estimates even take this at 10 gigawatts or higher of capacity by 2030. And to the people that are asking, what is the next Nebius? Keep in mind, this is a company that is it's smaller than 1/100th of NVIDIA. Okay. This is $39 billion. NVIDIA is $4.6 trillion. And if you're talking about one of the picks and shovels play for data centers or for AI in general, well, Nebius is one of those companies, first and foremost. It's smaller than CoreWeave, but the quote that I put up, just listen to their ambitions, right? They want to own the entire stack end to end. And so don't look at what they are right now. Look at where they're going and how they're getting there. And I think the execution is something that they've proven throughout the guidance that they've provided for 2026 and even beyond. It's what's led Meta, Microsoft, NVIDIA, all of these partners to want to be associated with Nebius, to make bets on Nebius, financial and strategic. And I think it's what's going to lead them to be a much larger company in 5 years than they are right now. This could be a multi-$100 billion company easily. So there's like a 5x, like easy baked into this, in my personal opinion, over the next 5 to 10 years. It's just simple math, right? Do you have the stomach to hold through that up and down? It's very volatile. Maybe you don't. In that case, take your double and, be happy. Nobody went broke taking gains. But I do think the potential is there. The writing is on the wall if you listen to management's ambitions and management's actions.
yeah, and it's so important. Like you can look at names like this or Airtest Systems and just be very underwhelmed with like price to sells. There's no earnings yet. What if you look at? I mean, you should look at that. I'm not saying that you shouldn't, but you're going to miss a lot of plays and opportunities then, because I mean, you're having growth rates. This is going to come down just because you can't grow, 300% every single quarter. But these guys are growing rapidly. You look at the guidance and the projections that's out there. You look at analyst expectations as well. We can look at some estimates here for revenue consensus. We're going from $3.3 billion. Yeah, that's right. I was like, billion or million? Yeah, it's a billion. 2 years just looking at air in the millions to almost 10 in 2027, and then 15 in 2028. Now, I will say with analysts, even though there's a few more that are covering it these days, they're not very good yet at projecting
Yeah.
revenue for Nebius. So take it with a grain of salt. A lot of times they'll be understating revenue. This might not be. I've not taken as deep a look as I probably should. But what I'm just trying to show is like this is very clear acceleration. You can look at the revisions here for what's been happening, of course, 2 years out, 2027. So it's impressive. One other thing too, like related to not every inference play, CoreWeave, is certainly differentiated as well. But one of the differences was that leadership and that management. So Nebius came from Yandex, and so they had exposure. They had people that worked in the space. They had people that thought of data centers. Like this wasn't like a massive pivot. It was a pivot of a kind because the Russia-Ukraine war and then founding a business and everything. But regardless, I'm not trying to say mean things about Iron or Cypher or any other company that used to be a crypto miner that is now doing this. I'm sure they have some incredible people working for them and some great engineers, but they're trying to make a pivot into the space versus Nebius. Like this is what they were going for from the beginning when they founded Nebius. So they have the core competencies, they have the leadership, they have the vision, they have the understanding of the space, and many of the connections as well. So I think leadership is also a factor here that shouldn't be understated. So
Yeah. A bunch of questions on Nebius. I'm sure we're going to get to them by the end of this show. Let's shall we move to our next topic, and then we're going to come back to Nebius, that's for sure.
Well, before we do, let me share like the two things that are out there that I think could pull us back. Like stocks move on narratives, right? Over the short term, money multiples absolutely do matter over the long term. This is one of those things this guy had pointed out, and I've looked and I've seen as well. There's a lot of this kind of stuff online, which is just plainly misinformation and misunderstanding, fear mongering regarding impact to the environment. Of course, I don't think it's as much fear mongering, but impact to the energy grid, of course, in the United States as well. And then there's articles like this. This was originally a Bloomberg article. It got recycled by Futurism. They added some data points. Zero Hedge as well. They've added a lot of graphs. But a lot of the data centers that are planned and created to make in 2026, 2027, 2028, they're looking like that they might be delayed or canceled. Now, I think that this, if you know the account, they tend to overstate things. So, take it with a grain of salt. But Bloomberg was citing, maybe 25% of the projects, if I remember that article correctly, could be canceled or look like that they would be canceled. And a lot of it involved or revolved around energy and energy demand not being able to meet that, especially with the White House initiatives, making these data center projects actually be able to also create their own energy source. That's one of the reasons why some of the other data center plays, they're pretty interesting because they actually do that. They have that. Any thoughts on either of those narratives and what they might do to Nebius over the short or long term? Or is it just take it with a grain of salt? These guys, they're where they need to be.
Yeah, look, I've covered some of this news in the past, and my stance has been largely that Nebius has, at least for 2026, largely passed the phase where they need to get approval. And so their projects have been cleared and they're now breaking ground. So if the door is shutting behind them, it would be shutting behind them for other competitors. And that's only if this passes, right? Like there's been plenty of things that Bernie and what's her face AOC have come up with in the past that haven't really passed. And a lot of it is advertising, let's say. But if it does pass, then obviously it's going to affect Nebius for future builds. in the US, but I honestly I'm not that confident that it will pass because there's much deeper repercussions for larger companies in addition to Nebula. So they're not excluded. I think they're fine for 2026. Even there was a case, I think it was Kentucky or it might have been Indiana, where there was it was like contested, but then the judge said, "Hey, look, no, they put in their application before any of these changes were made, and so they can continue forward with their application." So like they just made it past the cutoff, whereby they could continue with the project as planned. We'll have to like it's not nothing. I want to keep an eye on it, but
Sure.
I'm low confidence that it actually gets through.
Yeah. No, I agree with you. And good call out on that, Bill. All right. Before we pivot next, just a quick note, 'cause somebody noted it and I pulled it up in the chart too. Yeah, Ethereum having quite a day, and that's continued since we've been on the stream. Good job buying this and pumping it. I guess, Tevis. It's up
It's because Clarity, man.
6% today.
Clarity. Did you see the news around Clarity?
I probably missed it. If you're referring to something today.
Yeah, today. So they came out of their vacation, their Easter vacation or whatever, and Clarity, as of today, is going to advance the Senate Banking Committee, and they're expecting to have clearance. It's the first agenda on the table, and they're expecting to have this passed by, or past this stage, I should say, by the end of April. I think Polymarket was also pumping a little bit. Let me see if I can pull up the Polymarket on Clarity.
Yeah,
'cause that
I've
should
got
give
it for you right here.
Okay, great.
It's down.
Let's-
So
Hmm.
I don't know. It did pump earlier on the 11th. I did see rumblings of that possibly happening. It doesn't guarantee anything, of course, but no, that's good news. We'll have to see what version passes, how far this advances as well. But at least right now, there's no firm yes. Now, Kalshi does differentiate as far as the different strikes and dates, so maybe that's shifted a little bit. But yeah, this thing takes time. And yeah, Carl says end of April equals July. So it could be the case that these things take time and they have to go through review. They have to have comments. There has to be enough support to even make it to the floor.
Yeah.
You might not even see a vote. But yeah, we need to get things moving. Otherwise, if they don't, midterms are too near. Very little usually gets done before that big shift. And then you're waiting until the new year.
Yeah, look, what I will say is that there's still steps in the process that need to happen. I mean, we're nowhere near the finish line, but I would say that a lot of the steps towards the end are rubber stamps. Like we know the president's going to sign it. Like he's going to bag the win because he's been bragging about that win for a long time. Senate, I'm more confident in the Senate passing this than I was in the House, and the fact that we got Brian Armstrong now being on board with this version and pushing it through. I don't know if you saw that, Roy, or not, but you know, Brian Armstrong and Coinbase were highly confident that this was going to pass through in this latest draft. There's revisions to be made, and everybody has to agree. But we have the banking cartel, let's say, we have the crypto industry, and we have regulators and lawmakers all in agreement, at least for this current iteration. That is high confidence for me. Now, we know politicians move slow. We know that things can always get held up. But I would say that we're closer than we've been historically, especially since January.
Yeah, it feels that way. We'll have to see if that'll reflect in the prediction market or not. Of course, what comes out. Anyway, would you like to go into the guys that are displacing the banking cartel next? SoFi. Or was there another news you wanted to hit first?
SoFi is part of the banking cartel, man, as pertains to stablecoins.
Yeah, kind of. I don't know. It feels like they are a bank for sure. They are part of that. Yes, I do notice comments, and I disagreed with them personally on the Clarity Act, but they actually give yield. They're building products that people actually use. And today, of course, they announced something that on the surface you would think no big deal it's going to make, very little material impact, but that's actually not the case. I need to actually pull up the original article, maybe to recapture it. Let me pull
So
it up here.
here
Just give
is
me 1 second.
here's a little bit of unrelated news for you guys. I was looking to buy a new watch, and this is gonna be really quick, right? I don't want to like sidetrack. I was looking to buy a new watch, and Watches and Wonders is tomorrow. It's basically like a yearly event where all of these major brands announce like changes and new models, and it's going to be the 100-year anniversary of one of Rolex's models, and they're discontinuing the Pepsi. So I think this was just announced ahead of the event tomorrow when it's going to be official. I think it was just like leaked. It's not on their website anymore. So if anybody wants to make some extra money, pick yourselves up that configuration because it's not going to be produced by them anymore. Anyways,
All right.
back to the show.
Mel Jewelry. Okay, so here's what they announced. And on the surface, like if you look at SoFi's channel, it's not. It doesn't look like anything. It's like, hey, cool, you can move money around really quickly. No, this is the really interesting announcement. Galileo, that's their tech platform, enables SoFi to send and receive FedNow service payments. Now, if that was it, so yeah, it's cool because SoFi is among one of the first banks that you can both send and receive payments. A lot of banks do offer one or the other. FedNow, of course, is the real-time payment initiative that has underachieved. I think but it's still building slowly. It is important for the future. But what's really exciting about this, beyond just inside of SoFi actually being able to receive and send 24/7, which is great for banks, is the note that was right down here. All right, so with FedNow service running through Galileo's platform, SoFi members will be able to move money between their own accounts at different banks in seconds. And then right here, because Galileo is directly connected to FedNow service and already supporting SoFi in production, the foundation is in place to extend these capabilities to additional fintechs and businesses through SoFi Bank as the partner bank. Galileo's existing FedNow service infrastructure accelerates the path to market, enabling partners to build and launch instant payment experiences without needing to establish their own direct connection to the network. This includes digital banks, fintechs, and companies embedding financial services with their own apps. Now, what's really interesting about this is it's the second vehicle that SoFi now offers, of course, that they use themselves, but they also offer through their tech platform to their partners of 24/7 instant settlement. Now, of course, there's stablecoin, SoFi USD, and now FedNow services as well. And the more of these that they offer, the more simple that onboarding is. We don't know. I don't know how much friction that this actually eliminates. I'd have to actually study what that process looks like at FedNow. From what I understand, it's not. What Galileo is offering is probably a nice improvement over trying to do this yourself. It's going to save you a lot of time if you're trying to just accelerate that. But regardless, like this could be something that just helps them further build out the tech platform and also those banking services that they're trying to offer through the big business banking platform. So I really like the move. Being able to say, hey, even if you don't like crypto and crypto settlement, you got FedNow here. We can help you with either. That's how you build a platform. So really nice look, especially because like there's not been a lot of like specific pieces like related that even contain the name Galileo recently. Like it usually doesn't happen these days, but it was interesting. Did you have any thoughts on the FedNow real-time payments Galileo piece and what they're offering in the tech platform?
Yeah, look, I think it's just a good win for the tech platform, right? We're looking for the tech platform, especially now that they are unshackled on the crypto side of things, to start to really add value across the board. And this is when management themselves are also guiding for the tech platform to start making a dent in the financials. So we're going to see in Q1 what tech platform came in at, because of course we're expecting some big deals in Q1. But overarchingly, I think it moves them further into that AWS of fintech narrative. And we haven't heard that one in a long time, I know. But that's because tech platform hasn't been as strong historically. So, yeah.
All right. And are you any other news you want to talk before macro, or should we go ahead and hit that?
I think let's go ahead and hit macro. We have a lot of interesting questions this time around. Yes, I do see that Ethereum is pumping, guys. It's 2350 right now, and we'll keep an eye on it as we go forward. But of course, if Ethereum's at 2350, hopefully we wake up to BMNR um, being close to 23 bucks.
Yeah,
I don't know
that'd
if
be nice.
you are keeping up, Roy, with what they're reporting every Monday, but
Yeah.
some pretty interesting numbers there.
Very clear acceleration with their accumulation. If Tom Lee really does think this is a mini crypto winter, he probably sees this as an opportunity to try to finish that out, which will hit this year, that 5% allocation, and probably they'll continue buying at this range, especially.
Well, not
That'll
only
be
that,
exciting
but
moment.
like the fact that they're buying with cash, I think
Yeah.
amplifies that confidence that he must be feeling because they have such a finite runway. And of course, they're trading under the one MNAV. So, like, they were at $1.2 billion like 4 weeks ago, and now they're at 700 million. So, I think it really gives it more confidence.
Yeah. Tanner says, talk about how buybacks make sense, please, because I don't get it.
Yeah, I
You
get
want to
it.
take that one?
I mean, I get it. Like their business model is dilution, right? I think the buybacks, like $4 billion is a big amount in buybacks. They have less than 1 billion in cash. In theory, they could just buy back shares accretively when they're at under one MNAV. I don't know how that I mean, that works in theory. I don't know how it would work in practice because they've diluted so much. And so you might say, like, oh, well, what's the point buying back shares? But if they reduce their float when they're under one MNAV, right? Because the underlying value of the ETH they hold is higher than what their company is valued at, that's accretive. And the moment that they're over one MNAV, they can issue those same shares um, and raise that cash again. They're basically printing money to some degree. How did they do 4 billion if they don't have the cash? How do they raise the cash to do the buyback? I think it's authorization to do 4 billion. I don't think they're gonna like do 4 billion in one go. So
Yeah. This is the same idea as I think it was Tim, but there's a lot of other SoFi bulls too that floated as far as SoFi. SoFi is not one of those companies that traditionally would look to do the buybacks, just because as a bank you can lend multiples against your cash. It usually makes more sense to just grow your business. But there is a price, of course, where maybe it would be not only accretive but very compelling as and if SoFi continues to fall. Like for instance, $11 a share, single digits. Hope that doesn't happen, but if it does. But there was a thought that perhaps Noto and team would just announce an authorization for buybacks as a defensive measure, just to basically say, hey, if you're going to continue to bet against us and go down, we have ammo. We're ready to blow you up. Um, so an authorization is not the same as actual allocation to buybacks. And there are many companies that announce authorization, like Palantir had announced $1 billion, which isn't much given their float, buybacks a couple of years ago. They actually took that off the table in the last earnings. They're like, we've not really been buying back much at all. It's kind of silly at this valuation. Let's just not do that. So we well could see that. I think it's just a defensive measure. It's another tool there. And beyond what Tevis said, the further that they go under their MNAV, the more beneficial that potential buyback would be. But yeah, the main goal is not to buy back stock, just to use that as a defensive tool if necessary, but also be able to hit that alchemy of 5%.
Mhm. Cool. Do we want to move to macro?
Yeah. Yeah. So did today surprise you?
This is really funny actually. I messaged my aunt today. This is the one where I put 60% of her portfolio in NBIS. And I messaged her and I like screenshotted the NBIS price and I sent it to her because she was panicking when we were in the 80s. And you know what her first message was to me, Roy? What she messaged me back? Not
What's that?
thank you, not this is amazing. Wow, I made so much money. 60% of my portfolio chose to put in NBIS. She said, BMNR is in the dumps. And I was just like, um, all right, but like doesn't matter. You're still up by a big amount. She just cares about BMNRs in the dumps. So I was like, man,
Yeah, that I still have people that'll like be like, oh, you got out of PayPal and you lost a lot of money. It's like I'm not worried about that. It's okay. I've gained more through reallocating than I ever lost. So
yeah.
you know, not everything that you predict and invest in is going to go up and do well. But the nice thing about a market is you really need just a couple of strong winners and then some decent performers to have a fantastic portfolio over years. So,
Yeah. All right, let's move on to macro. Do you want to talk about the geopolitics?
yeah. So like entering today, of course, I had hedges that I just were low quality hedges for one day. Those ended up I lost a little bit of money on, but that's the nature of the hedge. I took them off actually this morning as soon as the market opened, just given the strength actually of the overnight market. Usually you want to take overnight markets with a grain of salt, but I've learned to read a little bit more into it, depending on, especially if there's extra volume on the Sunday overnight, just because there is higher volume there and oftentimes you're beginning to price in things after a weekend worth of news. So I saw in the overnight market, I'm like, there's a lot more strength here than I expected. And I even messaged you. I'm like, hey, some of these names, like we could see it green on no news. It's of course the market did a lot better than I expected. So these blockades, like I guess first, did the movement to the market surprise you? And is this a bull trap where if this blockade continues, it has an implication as far as energy price, oil prices as well for the long term, in which case the market might not be pricing that in.
Yeah, I mean, when I looked at futures, we were down big. And waking up this morning, I saw everything was down about 1-2%. I was like, yeah, that's not that bad. And so I just started work, and eventually I saw VG flip red from green, and everything else flip green from red. So I think it caught a lot of people by surprise. I don't
Yeah,
necessarily know. Maybe like, I mean, we're seeing new stuff come out today. I want to throw this up on screen where we know the negotiations fell through over the weekend. That's the reason why we were red. It's because if we don't have negotiations in this ceasefire time, then obviously, we won't get through it, have peace. New York Times, Iran offered to suspend their nuclear enrichment program for 5 years. Vance asked for 20. Trump projected 5 years. A second round of talks are likely. I believe they are going to be held on Thursday, is the latest that I saw. They're going to have direct talks on Thursday again. But like 5 year suspension, like I would take that. Then if that's on the table, it's like cool, man. Let's wrap this whole thing up, and maybe they, settle at 10, maybe 7, whatever. But the fact of the matter is, it's like it seems like just from seeing, all these things that are coming out of the negotiations from in Pakistan over the weekend that we're closer to the end than we are, a second more aggressive round. I think everybody's has a vested interest to see this thing finish. So
yeah, it looks like negotiations are theoretically moving the right way if we there's always a risk that we're just hearing somebody's excitement over a single point versus what's actually happening. This is I guess there's two concerns and two fears. Like but like I guess before I go into this, I don't necessarily think that this is a bull trap. Like I think we'll have more chop before this is cleared. There will be times where it seems like things are actually going to fall apart. I actually sold. I have a little bit of VG in my swing bucket, and I sold that in the overnight market too. I'm like, okay, it's going this direction. I'll reload that VG in a moment. But yeah, this right here, you can throw it back up, is one of the two fears. So one is, of course, negotiations falling apart and this resuming, which is going to be terrible for the region, for the world, and for energy prices. But the other is China, of course, is extremely unhappy, of course, because the United States isn't just allowing certain ships like Iran was good with it of China loading up on oil, bringing it back to China. The United States is like, nope, double blockade. So they've said Chinese ships continue to move in and out of the waters of the Strait of Hormuz. We have a trade and energy agreement with Iran, which we will respect and abide by. We expect others to not interfere in our affairs. Iran controls the Strait of Hormuz, which is not true, but and has opened it to us. So that's, there are more warships, it looks like, that are moving into the region as well. I hope, probably nothing will come over it, but there is a point where the market might begin to price some of that in too, depending on how negotiations are going. Of course, best case scenario is this gets resolved rapidly. We'll see.
That is the best case scenario. Yeah, we'll see what happens on Thursday, quite frankly. But I think the market is going to get more jittery if, what did I say last week? I said, look, there's 2 weeks left. The first week is mostly, worry-free rally. Then the last week is like, we're getting close to deadline. Have you never had an assignment that you leave for the last minute? It's like you have all the time in the world until you don't, and I think the market's going to get jittery next week, especially if the talks fall through on Thursday. So right now they're still clinging on some semblance of hope, myself included, but
Yeah.
that can change fairly quick.
Absolutely. Q&A time?
Let's do it. Yes.
All right.
All right, let me mark it down. QA. All right.
Okay.
Okay.
I will delete mine then.
Okay. All right. First question. Am I going to revise? We answered this. Do you need anything from? Isn't this a grocery store?
Yeah. I know it's big down in Florida, but we got HEB down here. We don't need any other. Costco's nice too. Those are my main two right now.
Yeah, I don't. You just said words to me. I don't know anything about any. I know Costco,
I-
but we don't have
I
HEB
got it.
or Publix.
On your trip down here to Texas, I got to take you to HEB. So it wasn't HEB, but you may not know this. When Gorbachev actually toured the United States, he came to Houston, and what actually fully convinced him that communism was dead was touring a U.S. grocery store, and it was a chain in Houston, in the Houston area. It's like greater Houston area. Because it was just a random grocery store that they stopped at. They hadn't planned to. And he thought, all the pictures of the grocery store and produce and the variety and the prices was just U.S. propaganda. It's like, no, it's how we live. And of course, Houston is a major hub, so our prices are pretty low. Variety is very high. And man, HEB is great. Publix, I know, is much love too. But
Right.
yeah.
I love that story because, as an immigrant, it so tracks. Every immigrant that comes that we have here in Canada or America, they go to the Costco for the first time. And they're like, what do you mean I can buy my clothes and the tractor and a flat screen TV and my groceries all in one? And it's just like crates. It's just the American dream, in reality, personified. So
Yeah.
it got
that's awesome.
Gorbachev to tear down the wall. So, all right.
Yeah, his quote is something like, "If the people back in Russia had seen this, then communism would be dead overnight."
Yeah, that's fair. Mopar, thank you for the $5, up 150% on NBIS shares, and Friday decided to write covered calls, 2 for 150. April 17th, $5 in premium. I felt this time was okay with getting assigned. If I do, I go to MU. Thoughts? So you want to use the money to go to Micron? I mean, I don't necessarily hate that at all. Roy,
Yeah.
what do you think? You've been talking about Micron. Are you still bullish?
No, well, I am. Yeah, it was in the swing bucket. I got stopped at. Well, I pulled the trigger on it as far as that happens with swings. I'm not the best swing trader. Long-term investor, yeah. Day trader, absolutely not. But swing trade, I do okay. But Micron is very cheap. The hard thing is there are some headwinds potentially that's happening there, despite there being a triopoly. I think Micron is actually better positioned with some of the things that they've been building and shipping out as well. But if you look at the pricing power, at least on the spot market, so retail market specifically, you can see RAM prices have fallen quite a bit. And I'm kind of curious, between that and just a couple of other things as well, that where people are, whenever you see something increase in price to this extreme, there are of course people looking for alternatives, and usually you can't find them over the short term, you can over the long term. So there is some cyclicality and everything. I think it's still incredibly cheap, but yeah, make sure that you evaluate both sides of the trade, the bear case and the bull case. I think it's a good opportunity, but maybe it was not quite as good as I was thinking. Like, I thought it was a table pounder when I bought in, and I'm like, there's actually more concerns here than I gave credit for initially.
Yeah. All right. Let's see what else we have. There's something that was kind of funny. Okay, let me move on to the next question. Roy, how much to switch the paddle upside down?
Well, I have an agreement for at least 5 days. So, but yeah, if you want to do that, $100. I will reposition that paddle for 5 days and lock it in for $100 every time.
Is that what it is? It's $100 per rotation.
For 5 days, you can have it any orientation, even backwards. So,
Wow.
so I think tomorrow is the day I can actually move it. So. Yeah, don't do that. I mean, if you want to, I'm not gonna turn away money, but yeah.
Mike says you're gonna make a great grandpa. You tell a good story with a lesson. I agree. I agree.
It runs in the family. My dad is a great storyteller.
Yeah. Let's see. What do we have here? All right, let's see. Well, what do you think of Microsoft going into earnings? Good trade at these levels. I mean, I think you're definitely getting a discount for them.
Yeah, if it's an earnings play, I wouldn't personally do that. Cheap can always get cheaper, but they're doing well as a business. They're caught up in the software sector, which today did fairly well. If you're looking at long term, I think Microsoft is compelling long term. Even if you think that there's going to be AI disruption, seat based, all that, they have investments in OpenAI that are substantial, and they also have Azure. So I don't hate it.
Put on the BMNR, $100. Dude, this is like the start of how you eventually get on OnlyFans. If these guys pay you $100 for rotate the paddle, put on the hat, it's a slippery slope, man.
Yeah, don't worry. I'll never be there. So nobody wants to see that, and I don't want to be there. But yeah.
Do you guys ever follow healthcare and health tech? Healthcare has been beaten down, and I think it's primed for a tech-fueled reversal in the next year.
So the one thing that I'll say on this, I'm not sure. I don't follow this space too closely, other than those that Palantir has partnered with, just to kind of check on how they're doing every now and then. There was a survey that was done in October, and there's been some updates on it as well. I think we've talked about it on this channel, but Americans surprisingly distrust AI or think it's going to be bad for humanity more than pretty much any other developed nation that's been surveyed, except for one area, and it's in healthcare. They see the impact, they see how it can be used positively. So I think that there is a lot of white space just for continued innovation. We've seen, like, what Palantir, for instance. Palantir is not the only player. There's there's Tempest. There's a lot of others too that are helping healthcare industries, hospitals really leverage a lot of efficiency, but also do what they do better. They've been able to save lives from it. So I don't know the answer to your question, but I will say AI will continue to be used probably at an accelerating rate in that field, and Americans are very open to that. And it's going to save lives and also save some money at the same time. So not a bad thing.
Mm-hmm. Does NBIS partner with companies other than hyperscalers? Yes, they do. If yes, are they the only neo cloud that does that? No, they're not. You have plenty of other competitors that partner with smaller, like the Higgsfield, for example. Like, that's a smaller player. I believe they have Black Forest, I think it is, Studios. Nate's in the chat. He'll definitely correct me. They have a whole bunch of smaller customers. Uh, Cursor, I think, was a smaller one. I mean, was a smaller one. They highlighted
Also
them in
small.
their earnings release, their press release, a bunch of select partners, and they're not all hyperscalers at all. Let's see. If I missed the Nebius train, is Cypher playing? If not, I don't think you missed the Nebius train, man. I don't know. Like it depends on how long you plan on holding it for, right? If you are planning to, you know, for a trade, then maybe you did miss it. But if you're planning to hold it for a long time, then I think you're perfectly fine.
Yeah. And there's like it depends on what kind of investor you are, right? If you're a swing trader, and there's nothing wrong with that, there's many people that make their money by swing trading. They do it very well, but you're careful with day trading. But if you're more of a long-term investor, one of the mistakes that retail often makes is, all right, I'm up, 60% on this name. Let me sell it and buy something that's in the space, but it's a weaker peer. Now, I don't know if Cypher is. I held Cypher actually when it was just a Bitcoin miner. I liked it a little bit better than some of the others, but I don't think that they're probably as great a company as Nebius is and will be. I could be wrong, but it's hard to make that pivot, even though there are some inherent advantages because of the energy stuff.
Yeah. Hold on. Let me see if I can bookmark some more questions. Sorry, I'm like
Yeah. So like while you're bookmarking that, like case in point, think back a long time ago to Amazon, when Amazon was a pretty small business that was doing its pivot from selling books to selling merchandise. Of course, there's been all other pivots since then. You could have easily said, okay, Amazon's done really well since whenever I invested it. Let me sell it and buy another competitor. And there was a bunch out there that were trying to do the exact same thing, and they have not been as good of investments as Amazon. So usually the market is glad to pay for quality once it recognizes that there is a name, and it might be. I think it's still early. Like there's going to be chop. This is volatile, but yeah, don't be afraid. If you know Nebius well, you're not Nebius, but I'm saying this to other shareholders and to myself too, because I'm underwater covered calls. But if you're like, this is a high quality company, they have a neat advantage in the space, they're going to perform very well. Why would you sell that if you see material upside in the next 5 to 10 years, if that's your time horizon, to buy something that is less sure just because it looks cheaper? That's usually a mistake. Not always, but usually.
Yeah. And people will fall for that, where they use price as their main indicator and they go from there.
Yeah, one of the most egregious was Palantir. People were selling Palantir when it doubled. And
Yeah.
it's fine, like to take profits, but they bought at the time C3 AI, which if you listen to Siebel I think that he's actually retired now, but like this is not the same quality. It's not the same opportunity. It's not the same play. And yeah, case in point, it played out that way.
Yeah. What are their revenue estimates for 26, 27? They're expecting to do 7 to 9 billion by the end of 26, and then not sure 27. We can flip over to the analysts.
Yeah, here they are again. I showed it earlier, but for 2026, 3.3, then up to 10, and then 15. But note that there's a extreme range, especially for 2 years out. You don't see that often, but yeah, as fast as they're growing, it's palpable.
Yeah. So that's Tevis's answers on moves forward. Maybe I missed it, but is Roy buying here? I think we were talking about Nebius when we were talking about this.
Yeah, no, I'm not buying here. I'm just trying to get out of my covered calls at 145.
It's crazy. Like, I don't know. This is the fun part about this. Like there's a time where you're like, I can't even write covered calls because it's not even worth it to write them.
Mm-hmm.
And then there's a time where it's like, oh man, I just pray this thing goes down so I don't get I don't get my shares taken away.
Yeah, absolutely. Yeah. And if they get called away, so be it.
Yeah, so be it. So if there is margin expansion, why would you cut your position? Is there a market cap you would consider to trim? Yeah, I think like my impulse, and I might not, but my impulse to cut my position is more around portfolio composition as opposed to me being bearish on the company, or, even if I am the most bullish on Nebius relative to everything else in my portfolio, I still want to keep it within certain percentages of my portfolio so I can adjust my risk because it's so volatile. It'll go up and down very aggressively. And so I don't want to leave this thing completely to run wild. And there might be a point where Nebius is 50% or 60% of the portfolio. It's like, that's great. It reflects how bullish I am. And my portfolio might be much bigger as a result of me leaving it. But I want to keep it relatively within a certain composition. There's probably a term for that, but yeah.
The other part of it is there's only so much money you can spend in your lifetime. And when you near that, I mean, you can kind of feel embarrassed. And so I don't blame you for wanting to make a little less money here. So
Yeah.
just mess with
it. Do you think Trump will get rid of taxes? I read this as Texas at first. No. But even taxes, no. Yeah, I think that was a pipe dream through and through. He can't do it. You need the revenue. You guys spend way too much money, first of all. Second of all, what does he need the extra brownie points for? He's not going to run again. It's not going to be like, oh, I got rid of taxes. You guys love me, therefore vote for me. Like he can't run again. So it's like, why? He's not going to do it. It's not going to happen. Roy, it's your country. Anything to add here?
Yeah, ever since it was passed in 1917 under Woodrow Wilson's administration, it's going to be submitted. Whenever the government tax something, they never want to let that go. There was more impetus back in the after 2008 for fair tax, which would shift a lot of the income to essentially taking that at the register. And there's some merit to that, but there's far less support for that sort of proposal and idea now. So I don't think that there's a way to do that without having ridiculous tariffs, which is a tax on us anyway, and B, there's just not political support. So no.
Yeah. Don't you love how when they introduced it, it was just temporary, just to get through this war. Here we are, over 100 years later.
Temporary and for the wealthy, and yeah, it's
now the wealthy are the only ones that don't pay it.
Yeah, there are a lot of loopholes. Yeah, like honestly, like if you're very poor, you don't pay much in the way of taxes. Instead, you have earned income credit here in the United States, and so you get money, or at least you don't have to pay money. And then if you're very wealthy, there's a lot of loopholes, and you're able to do things like borrow against your stocks, so you don't have to sell that, no capital gains. If you're in the middle class, that's pain. So you got to pay taxes, and you can't take advantage of as many loopholes. So, yeah.
It's true. All right, let's move on. Yeah, for the low cost of $5 million. Have you ever thought about it, Roy, like how inflation has crept so like pervasively into our lives, where like you'll go out for lunch or something. Like I had a couple of friends over the other night, like last night, and I ordered like 4 pizzas, and 4 pizzas plus delivery. It took me to like $100, close to it, like $95, something like that. And I was like, that was not that bad. And I was thinking like when I was a kid, like 4 pizzas would be like $30, $35. Yeah. And it's just so crazy, man. So many, like I went on, what day is it today? Today's Monday. Yeah, I went on Sunday morning. I went and I got a bagel and a coffee, and I got a little iced Americano and a little salmon bagel, and it was $18. And I was like, that's like, it's just like, they seem so normal to you, but it's just so crazy when you add everything up. You're like, how the hell do people live like this? It is, and And now it's like, oh, low cost of $5 million. And my stupid brain is like, yeah, I mean, like it sucks, but like, but in reality, it's like $5 million. Like, holy, like as a kid, I thought $5 million, you'd be like Scrooge
Set for
McDuck,
life.
like,
Yeah.
uh,
Yeah, no, it's like inflation is the most regressive of all taxes. And it's the poorest people that usually pay the biggest price on that. And it's terrible. I hope that we can get inflation down to under 2%. It's kind of built in by design to have some inflation, and I understand that part of it. But yeah, it's at least we have the global reserve currency, because if we didn't have that, like it would be a lot more extreme. But yeah, I was thinking about that the other day when one of my sons, well, my middle son, who's college kid, he's like, I'll never work for under $17 again, and I was thinking, man, what was minimum wage back when I was a kid? And it was significantly lower. I did make more than that because I was up in Alaska, but I think I was making like at some places $7 or $8. And when I was his age, like not too much difference. So 17 would have been outlandish, but 17 these days, it's really not that much.
Yep. Yeah, exactly. Yeah, just wait until the national debt comes due. Pizza $5,000. I mean, I
We'll go
guess.
back to the Bitcoin guy that bought the pizza with the Bitcoin. It'll
Yeah.
take that at that point. Not really.
It's
But no, that's like one of the things why, at least for me, like I continue to DCA into Bitcoin. I actually thought about increasing my DCA, and I'm like, I'm going to keep it where it is, because it is. I think I have it up to like 3% of my income per year. Maybe it's 2.5%. That just straight allocated into Bitcoin.
yeah, but it's crazy because like you look at what you earn, and then you think you sort of lie to yourself unknowingly, and you're like, I'm doing really well for myself. And then you look at those comparisons that like inflation calculators in reverse, you're like, oh, this is what 100K salary would have been in 1970. You're like, oh, it's not me that's doing well. It's just like everything it's like the rising tide that raises all boats kind of thing.
Like as far as investment, it's one of those things that most people at a certain point, and you probably have this too, Tev, is the target in your mind for, I'm good, I can retire, and I can live off of, a lot of people use the rule of 4%, which I think is very solid. The hard thing is, like, if inflation is much more aggressive, if we're in the threes for inflation over multiple years versus twos, what you think is going to be a very comfortable retirement might be, you can survive but not thrive. So it's hard.
That's very true. And the crazy thing, Roy, is like that we don't think about is we had a green day in the market today. Both of us made good amount of money. And if I look at my portfolio, well, I mean, yeah, you did.
Air moved 2%. Like disappointing Air, piece of junk stock. Like
it's still right. Like if I looked at my portfolio, I would be like, whoa, I would have to work X, Y, and Z amount of time to earn this. And then you think about how many people have never experienced that because they're just out of the markets. They don't know. And as behind as I feel sometimes when I go and buy my little $17, coffee and bagel and my $100 for 4 pizzas, those people are doing the exact same thing, except they don't have days like today. Now, on the flip side, they also don't have days like we've just had for the past couple of weeks where like you're consistently losing money. But that's a double-edged sword, right? It's just, I don't know.
But yeah, I like to your point, I was going to say the same similar thing, that to race inflation, to beat it out, if you're not investing, boy, like build a business or something, but you can, like, it's your money, but if you're going to leave your money just in your bank and you're like Wells Fargo and you get 0.1%, you're losing money all the time. It's just burning away, and you'll get to a point in your life where you have to retire or get to retire, and Social Security is just not enough. You got to do something for long term. So earn more, save more, invest more in quality assets, and don't stress over inflation. It'll be there, but inflation also hits the markets too. It's part of the market performance, like it or not.
Yeah. Yeah, they do have to teach it in high school. All right, let's move on with our questions. First of all, thank you, Matt Money, member for 31 months. It is crazy that we have known each other for longer than 31 months, Matt. Matt sent me a voice note the other day, and he's like, dude, we got to go to Mexico or Dominican or somewhere. And I was like, I agree. I said, I agree. Let's plan it. And then he just never responded. So thank you, Matt. And thank you, Deep Cheeks AI, our favorite. Sold 1,000 shares of NBIS today. Went to SoFi. Thoughts? Congratulations on the gains. And I think SoFi is going to do just fine if you hold it. That's it.
Yeah.
All right, let's move on. What part of midterms are coming? That's not for us. Nick says, yeah, let's just kick it down the road 5 years for the Iran nuclear to the next president so they can deal with it. They should need at least 10-year ban so they can figure out a longer-term solution. I mean, whatever amount of time you do now, like you've already opened that Pandora's box of allowing them to have nuclear in the first place. I think that was a byproduct of previous administrations. If I'm not mistaken, right, Roy? Like previous administrations were adding Iran to the group that they were like, we're going to have nuclear. It was like 7 or 8 countries or something like that.
I actually need to reach out to a family member who's in the field. He's a nuclear energy engineer, so served in the Navy on a sub too. Brilliant guy. But my understanding, and I might be wrong, is that this is for specifically for building reactors, and the grade. I've heard thorium, and I've heard. I don't remember what form of uranium, but I've heard it in both cases that neither can be refined. I know thorium can't, but that neither can be refined to weapons grade material. That it really can't be done. That it's just so. I need to do some more research on that. I'm not sure, but if that's the case, I wouldn't be concerned. It is a little weird and suspect that one of the more energy-rich countries in the world that has a ton of oil would be like, hey, we need nuclear reactors too. Wink, wink.
Mm-hmm. Yeah. So apparently, the program started with heavy support from the U.S., Western Europe. This is post World War II, and during the Cold War, in the late 50s to the late 70s under the Shah, and then when the regime changed, it sort of died down a little bit, and it was revived. The enrichment program, was revived in the 1990s. With some help from Russia and China and others. So, yeah, it had peaceful energy and medicine use cases until 2003. And there was a 2015 nuclear deal where they could enrich uranium to 60% impurity, very close to the 90% weapons grade level. Experts generally agree their breakout time, the time needed to produce enough material for one bomb, is now measured in days or weeks rather than months. So this was the justification initially for the US to get involved, was because they were achieving, this is my understanding, right? This might be incorrect, but they were getting close to that level where they could be a real threat from that perspective. And so, Nick, again, just my perspective, yeah, and I'm not a geopolitical strategist by any means, but whatever amount of time, whether it's 5 years or 10 years or 15 years, like they are just kicking that can down the road. Like this Pandora's box is opened from a unlocking this technology perspective. And I think, and I don't want to get political, but I think until you can have a less radical regime, then it's always going to be a threat that these tools are used for, or these technologies are used for harm. So That's my answer to that. All right. Will NBIS be the next hyperscaler? According to their CEO and their ambitions, they will. Do we believe it? Well,
It's possible.
it's possible.
I don't think it's a small possibility either, but yeah, a lot of execution between now and then. A lot.
Yeah. Which watch did Steve tell Travis to buy? Well, I don't know. I haven't bought one yet. I wanted to buy a vintage day date, and he told me don't buy anything vintage. He said he's like just buy a Datejust, but buy a new Datejust for the same price that you would buy a vintage day date. It's interesting advice, but I mean, he was telling me to buy like a GMT, and I was like, that's not the vibe that I'm going for. I want a more like refined, like dressy type of watch as opposed to like a GMT or something. But yeah, that's what I'm in between. I'm in between either a Datejust, but I kind of would really want to get a day date, a used day date that's not one of the expensive. I mean, I want the expensive ones. I just can't afford it. So TBD. When do you guys typically look to use leverage such as leaps? When stocks are at insanely low valuations. Like, for example, I was buying leaps on SoFi over the past 2 weeks because SoFi at $15 struck me as ridiculously detached from where I think they should be trading.
Yeah, I didn't quite pull the trigger on any leaps actually this year so far. I think that's accurate. I think I bought my VG ones in December. But two things. One, what Teva said, when something is ridiculously cheap, that they're growing well, and then I give myself as much time as possible. So if it's December 2028 or as much time, and then I make it fairly conservative strike. I'm not trying to get the ones that look super cheap, and I'm like, oh man, this will be great if this stock only like quadruples. Like, I'm not counting on that with anything. So, but I almost got to that point with SoFi. I actually agree with Tevis that in the 15s it was very attractive. The problem is I didn't have really much cash. Now I do. I'm sitting on about 4% cash, and I also will likely buy if we see Robinhood retrace to 60. I'm not 63, 61, like 61 some change, whatever. But I will start buying some leaps there as well. But the other part is when I have just a ton of shares, especially if it's a new position, my position's already there, but I have some weight that I can add, then at that point I'll usually sell leaps. And then when or if, because there's no guarantees in the market, the stock starts moving up dramatically, that gives me the flexibility to take gains on leaps instead of the shares, and I can just keep the shares. A lot of different ways to play it, but that's how I do. My exposure to options is usually about 10%. Right now, it's about 4%. And entering this year, it was about the same. So actually, it's maybe even less. But
Yeah. Let's see. What's your expectation in regards to top and bottom line numbers for SoFi in the next earnings call? Stay tuned because each of us are going to be releasing earnings forecasts videos, and probably those are going to be coming next week at some point or another.
Yeah.
Nvidia getting close to 200. How's the puzzle is gathering dust on my shelf, Matthew. I'm sorry. It's never going to cross 200.
Thanks,
sorry to break it to you like this. Any idea what crypto is up to in the last hour? Yeah, we talked about this. It looks like it's higher confidence in clarity, but that's the only thing that I can point to. Bloom Energy. We are asked about this every show. I know Dumb Money guys are bullish on this. Roy, you still haven't looked into them, I'm guessing.
No. I spent just a few minutes looking at it, but yeah, I don't know much specifically. There's a big energy demand in the space, and the stock's doing well. That's all I know.
I've been away from news all day. Why did the markets go up today? Confidence on the P stocks, I guess.
Yeah, the fear was that they would not only not go anywhere but fall apart and then resume shooting at each other. That didn't happen over the weekend, and then they've made progress today, so it's good.
Yeah. Could we see a big tech company take a big stake in Nebius? I know that they don't want to sell, but would they sell a little bit to get that consistent business? They already have the consistent business of NVIDIA. Maybe. Yeah, maybe. You could see one of the big, like Meta or somebody, make a big investment in them. But like, what would be in it for Meta? Like, let's say Meta takes I don't know what a big stake would be. $10 billion stake. All right, great. Now what is Meta gain that they didn't have before? They already had a partner. They're already buying all the excess supply. I don't know. Maybe.
Yeah, I actually think it's unlikely just because the capex demands are substantial for a lot of these businesses, and so like Nvidia increasing their stake, that could happen, but I don't think that that's what you're talking about, Matthew. The rest, they have a lot of capex that they need to build out, and I think that they look more for this type of investment in those times where they have just a ton of cash more than what they need for capex. That's not the case with most of them.
Yeah. How much does one data center cost to build out? So the way you should think about the cost of the data centers is really per megawatt, because you have different sizes of data centers, and the rough estimate is, I believe, around $11 million per megawatt. So one of the big campuses, like the 300 megawatt campuses, is about $3.3 billion. You know, Missouri, 1.2 gigawatts, estimated 13 to $15 billion. Like, so that's like the rough mental arithmetic that I use, and of course that takes into account the cooling, all the retrofitting, the interior electrical systems, obviously like the land, obviously buying all the racks. That's like the big. They talked about this in the last earnings call. They talked about the actual unit economics of building out a data center. So if you want more information, then definitely go back to that. But around 11 million per megawatt is the rule of thumb that I use. Seen a lot of Travis's BMNR videos that show the growth of tokenized assets, but with the fees going down, does the burn rate not also plummet? At what point do fees push Ethereum costs up? Growth of tokenized assets. So there's more tokenized assets, but the fees are going down.
I don't think that's what they're trying to do with the fees and the fee structure. I'm pulling up the transaction price. The Fusaka update was intentionally there to reduce the fees and bring some of that traffic back from the layer twos back to the layer one, which is Ethereum. And it's done that effectively, actually more so than they anticipated. This is from Glassnode, and we can just look at it over the last, let's do 6 months. Fusaka update, of course, came out, and you can see, well, it's actually kind of harder to see. This is the ETH price, so don't worry about that. There's a way to hide it. There we go. But you can see that the price has been pretty stable outside of 1 point, and it's lower meaningfully if we look at it further out. So this isn't, it's not like some of the bears had intimated towards the end of the year, beginning of this year, that this is bearish and it's going to be unsustainable in the future. But yeah, that doesn't really impact the burn rate. Now, if you look at the actual ETH supply, I'm not going to pull it up here, but it's not really increasing. It hasn't increased since they've actually initiated the burn. So, and they can always adjust the burn rate if they need to. So I don't think that ETH will be inflationary, in other words. So, but yeah, fees, it's a good thing that it's actually fallen for the most part. You don't want to see it go like to zero, but that's not what's happening with Fusaka.
Palantir at 99, SoFi at 12, or Nebius at 80. In order, what are you buying and what percentage of each? Roy, 100% of Palantir is not allowed.
99% Palantir.
Actually,
No, not at 99. Like if it was 49, yeah.
yeah.
uh, I would have to think about it for just a second. So Palantir at 99 is good, but I would say probably Nebius. Man, I don't want to do just thirds because that's the easiest thing to do and just be boring. So let me say Nebius probably. Let's do 50% Nebius, 30% Palantir, and 20% SoFi. And it just having long term horizons. Like I think SoFi short term might outperform Palantir, but long term, I'm going to go where the boats are. And SoFi has a good one, but like Palantir's ridiculous, and Nebius has a very good one too.
I'll do. Uh, I'll do 50% Nebius, 40% SoFi, 10% Palantir at those prices. And that's saying something, man, because keep in mind, like when SoFi was at 12, Palantir was also at, 40, I want to say. Like they were at a comparable, like, yeah, because Palantir went
Market
up,
cap briefly, yeah.
yeah, briefly, right? So, um, let's see. Great calls on NBIS and Air, but now that we've doubled or tripled in 2 months or so, not interested in starting a position here. Why didn't you start it before? What is your next double in 90 days? Like,
Yeah,
I don't even
we
know.
talked about these. It wasn't like we talked about them 2 weeks before they ran. It was for months, 7 months, multiple times. So yeah, but no, that's a natural tendency. And again, it's sometimes I think that there's a lot of good opportunities out there, but screaming buys like Nebius and like Air were. I wouldn't say are right now. They're not like super common. So you can if you feel the need to always figure out the double in 90 days, you're going to get burned badly in the market. There are some people that can find that on a fairly consistent basis, but it's pretty rare.
Yeah. Um, yeah. Uh, we covered Nebius. It was like the first thing we talked about. So definitely rewind to the very beginning.
Yep.
Let me throw up a question. Anthropic, OpenAI, and SpaceX have to buy, but in what order? I think our order is
Anthrop
going to be the same, but go ahead.
yeah. Anthropic, SpaceX, OpenAI.
Yeah, it is the same. Yeah, OpenAI is the last thing I want to own of those three. SpaceX, I want to own, but it's just going to be expensive. Anthropic, I want to own regardless.
Yep.
Let's see. Rolex Mariner, date or no date? I like the date personally, but I don't know. I was thinking about getting a sub, but I like date chests better than a sub. I know a sub is sort of like a classic, so I might end up doing that at some point, but yeah, I don't know. Day Date Green Dial on Jubilee or Daytona Panda? Ooh, I really love Jubilee. I think Green Dial is really nice. Um, like yellow, gold, green dial, Jubilee. Yep, I definitely pick that. Panda's nice too. I don't know, dude. I've gotten way like too deep into this rabbit hole, Roy. Um, but yeah, I would pick the day date. Imagine you want to clear your head and get away from markets and everything. Where's your dream vacation to get away and decompress? Great question. Go ahead, Roy.
Mm. Well, since I'm married, my wife's going to probably say Europe. She's not been. I have been. So probably a continental tour of Europe. I think we take the Channel, actually. I was first in Europe, by the way. I think the Channel had been open less than a year. So that was a neat experience when I was a kid.
Is that the one from UK to France?
Yeah, or vice versa. In this case, we went from France to the UK. So, but yeah, that would be great to take her and my daughter to the the sons, they're always invited, but they're usually busy working on their degrees and earning money and stuff. So yeah, but Bali I would like to get to too at some point. Like it just looks ridiculously beautiful and amazing. So
Where would I want to go to take my mind off of things? Probably somewhere in Europe. I feel like I cannot disconnect if I'm not in Europe. But like those people, it feels like they don't have jobs at any given point in time. It's like they're always, dude. Seriously, like I'll go back and the cafes are full, and it's like 3 p.m. on a Tuesday or something,
yeah.
and it's just a different pace of life, man. I could definitely live in. Well, I probably plan on living there. We'll
Yeah,
see. We'll see.
Greece in particular and Turkey too. Like that region is just neat to me. So tons of history and natural beauty, food. I mean, like yeah.
Dude,
One of the I'll share this. My younger brother. I don't know that they're serious, but they're thinking about when he retires that and the kids are all out of the house, and they're just about at that point of moving to Greece, and he can do what he does as a software engineer over there. And yeah, slower pace of life, great food, great environment, lots of history. And I'm like, maybe we'll move with you. I mean, not really, but yeah, it's a neat that we can do this.
yeah. Yeah, John Mayer's nice. I think I like the Paul Newman as well. I think that's really nice. Um, any of you just purchased Pepsi Rolex? I was looking. This is the one that was discontinued. I was just looking at those 10 to 12,000 pounds. Too pricey for me, but the watch looks awesome. Look, man, timestamp this, clip this, whatever. Today is April 13th. Watches and Wonders is tomorrow. You buy a Pepsi Rolex today. Check back in 6 months or in 12 months. The secondary market for those is going to be increased. You're probably going to make, 5,000 to 6,000 pounds easily over the next 12 months on those because they're discontinued, right? So they're not going to produce them anymore. And so now you get into a finite supply game because the production line's turned off. Same thing with all these vintage watches. Like a lot of them retain their value just from the historical lens as well. Anyways, what do I need to disconnect? I need money, June. That's what I need. I need money so that I cannot think about more money.
He needs a girl.
Yes. Well, you know what a girl needs, Roy?
Money helps.
Yeah,
Now,
exactly.
I met my wife when we owned nothing and we were happy, but
Yeah, they
that
don't
can
make those
happen.
anymore. That's
Yeah,
also discontinued.
that can happen in college. It's harder when you're an adult. Glad I'm married.
Yeah, they don't make that time's done, bro. It's called. I'm not going to say it online. Anyways, next question. Once BMNR gets to 5% and say ETH is taking off, do they just dilute for moonshots? Do they try to go after 10% of ETH? What happens? So Tom Lee talked in their annual shareholder day around the 10% milestone. He was like, we might go over 5% a little bit, but we don't want to be too large. So probably what they're going to end up doing is diluting for moonshots, sure, but also staking everything and probably raising a dividend, so that they can attract more volume onto that validator network as well.
And they probably won't go to 10%. Lee had mentioned before that they could go above 5 and not really risk the network. 10%, they start taking away some of the feature of the decentralization and multiple parties actually owning Ethereum versus, I mean, that's why they've had 100% uptime.
Mm-hmm. Yeah, go disconnect in Thailand. I think definitely see it, man. I could definitely see it. Just go off the grid for a couple of years. We'll see. Aren't the BMNI buybacks just authorization when the time is right? They're not doing this week, just a green light. Yeah, exactly. Which is what I think we voted for in January. That's not what you voted for in January. What you voted for in January was for them to be able to issue more shares, not necessarily to buy back shares. So it's slightly different.
Yeah.
Bloom Energy, no thoughts. ServiceNow, any
It's
thoughts?
decent. If I had to pick a large cap that was in the SaaS space and it wasn't Palantir, it'd probably be ServiceNow. But I like it, but I don't love it, and I don't invest things in that I just merely like or see as a decent opportunity. It's hard for me also to like figure out how much disruption is in the space. But like if you're pitching me that versus all the other SaaS, even CRM, easily ServiceNow. I like what McDermott's done there. I like the comments, especially that Jensen Wong has said on ServiceNow that like basically that they are going to be a major engine for AI development in the future. So their deployment.
Yeah. By the way, the reason why people are asking about Bloom is because it's up over 14% after hours, and it's absolutely at its all-time highs. I don't know what they released, but probably something impactful.
Yeah.
That one has rallied quite a bit as well, Roy. It's pretty much doubled from their lows almost, and their lows on March 30th. So
Awesome.
in 2 weeks, it's basically doubled. Congrats to everybody in that name. So they had an Oracle deal. That's great.
I did see that actually. Yeah.
That's
really
that's
good.
huge. Yeah, congrats to everybody in Bloom. Good work. Good work. Roy, how does it feel to be famous?
Yeah, that was fun. I knew that they had recorded. I didn't know they'd use it. Of course, they had showed emits first, but yeah, it's fun. It's really neat. It's if you were going to tell me like 3 years ago, like that this sort of thing would be happening, but like, nah, I didn't even have a channel on YouTube, and I was barely posting on X. I think as more of a reply guy at that point. So
Yeah.
still feels a little unreal.
Well, it's well deserved, my friend.
Thank you.
All right.
You keep bookmarking more. I'm like, the queue is going down. No, it's not.
Yeah. Thoughts on Rocket Lab?
Well, I do have one piece of news that I saw, and I pulled up the actual filing. Rocket Lab has now been approved to launch one Neutron rocket. So that's going to be really interesting. Like this is there's two catalysts I think for Rocket Lab right now, and there's probably a ton more. I'm just missing it. But Golden Dome is one of those, and we'll see if they are. What happens with that project if they're named or not. Now, there were a couple names that were mentioned a few weeks ago, and they weren't one of them. But then the Neutron rocket as well. Look at what they're saying about it. Now, myself, I think it's a great company. It is one of those like 7 or 8 that are on the watch list that I've done enough due diligence and research that I might make it a position at some point. But I think it's pretty expensive here. And it wouldn't surprise me that it just kind of is in chop range or chop mode between now and the end of the year because it is pricey. And you have to kind of question how much is actually priced in with these future catalysts. So great company though. Like if you're asking about company or a long-term investment, awesome. Probably you could get in at a cheaper price, but who knows?
Thank you for the donation. This user says Taco Tuesday tomorrow for markets. No more tacos? Question mark, Roy.
I mean, like if things are going well with the markets, with the blockade leading to some headway into the negotiations. Hopefully, we don't have any more tacos, but I think it'll take a little while to play out. But maybe not. So things have been. I mean, we talked about it on Friday, and I shared what I thought might happen. That so far is not playing out, which is great. So hopefully, there's not a need to taco. And I hope we don't just say, okay, great, on to Cuba next.
Yeah. Another thing to keep in mind is we are heading into earnings season. This is what the calendar looks like for the weeks ahead. So definitely something to be aware of. There will be many companies reporting over the next 2 weeks, along with all the major Mag7 names. Netflix is reporting this Thursday. And by the time you have the next bootleg, we'll be in full swing. So keep that in mind as well as you start to navigate the geopolitics. There's also another layer of this as well, which is earnings. Will TSMC earnings have any effect on Nebius? I don't think so. Not like an outsized number any more than what it would have on any other company.
Yeah, they've already reported, so
Yeah.
you can look at the stock price in it. I don't think it moved at all on earnings. So, yeah.
Did I miss after hours news on BMNR? No, it's up because Ethereum's up after hours. Actually, let's check on that. Ethereum is 2375. It almost hit 2400, but yeah, Ethereum is up over 8% now as of today. So that's why BMNR is up after hours, Lisa. SoFi, I know they need to grow first and foremost, but what would their income or cash balance need to be to even entertain dividends?
Good question. Like just off the top of my head, we're probably looking 5 or 6 years out for any kind of a meaningful dividend. Now they could do something earlier, just as a signal to investors, like, hey, we are going to be a dividend stock. Here's your penny and change. You know, kind of like what PayPal's initial dividend is. But like meaningful, you probably need 5, maybe a little bit more years to be able to see that.
Yeah, I wouldn't necessarily say it's a certain level of revenue or income, and now they're going to entertain dividends. I would say it's more of a calculation around what's management's confidence that they can get more shareholder returns organically through growth versus paying out through dividend. And there's still a lot that they can do. So dividends are coming, but yeah, I'm with Roy. 5 to 6 years sounds realistic of a time frame. Probably later, honestly. Do I FOMO back in with my cash? The position I'm interested in is Rocket Lab. I mean, Rocket Lab hasn't bounced as much as other names, so I don't know. Like, what are you FOMOing into? Like, this thing has been flat for like the past, 2 months.
Yeah, and on a name that you want to get in that's a little higher than you'd like, if you are an options guy, maybe look at writing a cash secured put at a level on a strike. I wouldn't go like out to the end of the year or anything, but that's a good way to possibly get a cheaper entry or at least make some premium with the cash that you're sitting on. I've done that before and been surprised. Sometimes the market will give a gift.
Mhm. Yeah, we're looking really green on after hours, Roy.
Good. Guess VG will go to 0, but that's okay. No, not really.
Yeah, I mean VG is red in
Yeah.
after hours, but BMNR is up, Hood is up, Nebius is up another 1%, 156. Yeah, got close to 160 today, which is insane. How would you guys approach generating 500 USD per month with the least amount of risk? Options, selling options, or dividends, I guess, with the least amount of risk. We just need more capital.
Dividends. Like JEPI or JEPQ, look into them to see how they do that. Be careful of like yield max type strategies, which well, look into those. But yeah, like you might even there might be some names there too where you're like, hey, I'm just going to hold this stock forever and look at those dividend kings. But yeah, I think dividends is probably the least amount of risk at the company that's not being disrupted. But yeah, don't just look at yield. But yeah, I think a lot of people do look at like the JEPIs of the world for like this is to get some income and generate some income. You have to have some capital for that though. If you don't have as much capital, there is risk with it. But selling options is a good way to go about. And poor man's covered calls is something that I think is probably not talked about enough for retail. It's a little bit different in the way that they're closed, and it does depend on the platform versus a traditional covered call. But in essence, what you're doing is you're buying a leap. And usually the best thing to do is either you get lucky and you bought leaps that are out of the money, they become deeply in the money, and then you sell against those. Or you buy intentionally deep in the money leaps which will basically be a proxy for 100 shares, and then you sell covered calls at higher than what you bought this for, and you generate some income. But there's risk no matter what strategy that you're looking at, like even dividends. But yeah, dividends is probably the least risky if you have some capital. If you don't, maybe look at poor man's covered calls, selling options, or just go out and find a side job, a side hustle. Like that's probably the least risky right there if you have the time.
Yeah. Yeah, exactly. Are we bullish Tesla? Musk's going to get that 1 trillion pay package. Tesla's
Not
at
really bullish.
350. So
Love the company. Like I'm bullish, but not like super bullish on the stock, and it's just because of valuation. And there's a lot of execution that's needed to catch up to that. It'll always trade at a premium, but I mean, there's a reason why I don't have a meaningful amount of Tesla shares. The shares are just a placeholder right now.
Cartier or Rolex? I like the Santos. I like the tank, Cartier tank, but yeah, I would say Rolex has more models that I like. It's also more expensive, so I would say higher demand overall. Do you love me? Yes, Billy Jack, we do. What's a good way to prosper from falling oil prices?
I mean, like if you're a futures trader, you can do that, but predictions markets is another possibility, or just look at something that benefits like transportation from that substantially lower cost of energy. So
Yeah.
like you can even look like further down the line of like cruise ships, airlines. Oil prices do have an impact on, and it's not every single type of oil that's refined to jet oil, but yes. I can't do it till tomorrow, but yes.
Yeah. All right. I'm not bookmarking any more questions. Sorry to those who asked, because we have been live for almost 2 hours and we still have 20 questions to get through. So I want to get through them. If you had to deploy money tomorrow, what would you buy? I think SoFi is still very attractive. 17 ball, like Nvidia is still very attractive. Meta is 630, very attractive. BMNR, I guess, if you're bullish on ETH, is very attractive. I think Matt played BMNR better than all of us because he bought it at like 18 or 19. Yeah.
Figure Technologies. I bought some on Friday, I believe, or maybe it's Thursday last week. It's one that I continue to allocate, but I'm just speaking from where my portfolio is and my allocation. NBIS I wanted to add to too, but it's where I'm comfortable not adding and looking for other opportunities. So.
Actually, Wix was also down again today. It's so crazy how low this thing is trading relative to everything that they have coming up. So I think that's pretty attractive.
You want me to tell you how low Wix will go to? I can tell you.
How low?
$44. Why? Its base will be 44.
Thank you, Dad. All right, next question.
Watch it come true. I put the clip marker there. We're gonna play it when it hits 44 and be like, the bottom is in, guys.
Bro,
it probably won't get that low.
I hope that's not the case. That would be wild if it does that. But
I mean, I'm on the outside looking in, and if it goes there, like there is a point where you're just paying for base 44, and you're getting a company that generates money and is buying back a lot of shares. Now, I think the business is being disrupted over time, but I don't know what that point is, but 44 seems like a good bill.
Yeah. That's crazy. Anyways, let's go on to next question. Ever been to Mexico City? I have not.
Oh.
So I have to go. Roy is in Texas.
Mm-hmm.
Did you bank today, or are you holding Nebius to 200?
No, I have underwater covered calls. I believe it's 145s for 2 weeks out. So I'll roll those up probably again, like unless Nebius is looking at 200 and it just doesn't make sense to roll. But I'm okay letting them go away if they need to.
Price
That's
target
so
for
hard.
Nebius by 2030. Yeah, good luck with that.
I have no guess. Market cap, baby. Like, what do you like? The hard thing is, if for a price target, there's a lot of dilution that's happening between now and then. So I think it's a lot easier to predict market cap versus price target.
I guess, but you can get pretty close with the price target from market cap. I'm not even going to try, and I don't think we have enough information, but it's a big number. It's a big number.
Higher.
Yeah, higher, much higher. What's FU money to you? Over 10 million? George asks. I don't think so.
I don't think I need that much.
Yeah, maybe, I don't know, maybe like 5.
Yeah, 4 million was the figure that I looked at in the past, and I need to maybe just adjust that in case inflation is more persistent than I was expecting. So
Yeah, isn't like 5 million the new 1 million kind of thing? Which is
yeah, kind of like so. The way a lot of people look at this, there's a lot of tools to look with this on, is the rule of 4%, which is basically you can take 4% relatively safely from whatever you've invested in,
I like
and to be able to use that uh, as income. And unless your lifespan is technology gets to the point where you're going to live another like 200 years, that's not happening. Then you're like, okay, maybe it takes some out, but usually at the rule of 4%, you are inflation proofing yourself. You're in more conservative things as well, and you can live off of that until it's your time to pass. So, so take whatever $1 million figure, multiply it by the rule of 4%. Look at that number, not in terms of today's money, but what's expected as far as inflation in the future. And if you're an American, probably don't count on much help from Social Security.
Dude, I think the rule of 4% is like so outdated at this point. Because, like, you know how easy it is to make 4% on your portfolio with relatively minimal risk while selling some very conservative, covered calls, cash secured puts. Like, if you're running a wheel, you can make 4% very easily on
Yeah.
just the SPY.
That's why I like it, because I don't want to go into retirement thinking like, it's a little risky, but I think I can live on this, versus like rule of 4%. So for me, $4 million generates 160,000. You look at, I'm closer to retirement than Tevis. Well, maybe not, but as far as age, I am. So that's 20 years out. I'll be 65 then. You look at, I can't remember what the inflation projections were that I ran this for, but it gives us a comfortable living. Are we, going on and owning our private island and yachting? I don't care about those things anyway. No, but I want to be comfortable. And then I agree with you that there's higher upside possibility, which I'm not going to be like in super high beta stocks or anything. Matt Money, he's beta money. So yeah,
If he invites us
hits
on
that
his
next
yacht,
year.
we'll just join Matt's.
Yeah. But I'd rather like be very conservative with what I think that I need for retirement, and then be surprised pleasantly to the upside. There's some like Dave Ramsey. I'm sure you know who he is. They float the idea of the rule of 7%, which I think it's doable, but it's pretty aggressive, and I wouldn't want to enter retirement with that assumption.
Yeah, 5 million Canadian is like 500,000 US, dude.
Well, you have to keep in mind this guy has to fork up 5 million to get in the United States, and that's US money.
That's 5 million
Canadian.
US. I have to like start all over again, and I'll be broke in the US. Jeez, did you see like at the Liberal convention they're now floating a $500,000 fee for Canadians who want to go work in the US, and I'm just like, just fucking lock us up, why don't you? Like, it's just going to be cheaper and easier for you to do that. Like, it's insane, dude. It's full on.
Yeah, when you can't compete and you're like, we're not even going to try, what we'll do is we'll build walls, try to keep people from fleeing. Canadian dream to come
Yeah,
to America.
enjoy this YouTube channel for as long as you can before it gets shut down by central media. Anyways, the party doesn't want me talking about these things. Let's move on to the next question. Could the ceasefire be Liberation Day 2.0? Is it possible for SPY to go up a couple of months straight? It's possible.
Yeah, it won't be like a lot of the recovery is priced in. We're near all-time highs, so don't expect like the SPY to go up like 20% in a few months, but I don't think you're expecting that necessarily. I think the sell in May go away. That's been long retired. There are some Mays that it feels like that, but thank you.
What's the long-term price target for you guys? Realistic and dream scenarios. Is this NBIS? I don't know what he's talking about.
I don't have one if it's WS, so
I just let's revisit this after they hit 200. Okay, that was my price target. You guys didn't believe me, didn't want to believe me. I think they can do it. Let's see if they do it, and then ask me these questions again. Why are they not releasing share count? I'm assuming
BMNR. Yeah, it gives shorts, and then they are shorted ammunition to know exactly where they're at as far as their MNAV. Some measure of doubt is actually helpful with their strategy. So they do release because they have to by law in their 10Q filings right after earnings.
Yeah, I mean, even if they buy back shares at this point, I don't think they're going to release like, oh, we retired X amount of shares, because then it's going to lead to more questions about share count being in the weekly update. No, I'm not saying end of week it's 200, but I'm saying end of year, as in 2026, it's going to be 200. So, what are your thoughts on Oracle at 150? How messy or solid is their business model? Seeing some high price targets.
I would rather invest in Amazon.
Yeah,
it's not a bad business. I think it's decent, but I don't think that they have nearly as deep of a moat as some people might be pricing in, depending on those price targets. So good opportunity versus very good opportunity.
Do you believe Tesla Robotaxi will make 20,000 yearly units? I'm assuming, or
I'm not sure.
Each Tesla Robotaxi will make $20,000 yearly.
Oh, boy, that's hard to say. Like they've been clearly experimenting with their pricing model, so I don't know that anybody can do more than just napkin math on that at this point. I've certainly not done the math.
Yeah,
I would be surprised if they couldn't. I mean, you just think of an Uber driver; he can make that in a year. Why wouldn't a Robotaxi be able to do that?
Well, I don't know what he's talking. Is he talking about like each 20,000 yearly from subscription fees paid to Tesla, or like profits paid to the owner because it's pimping the car out?
I mean, like I'm not sure that that's even going to happen. That's not what they're pushing right now. So
I don't know,
but yes, I think that's possible.
Let's move on.
Very.
Would an official deal with Iran be enough of a catalyst to jump start BMNR's climb back to all-time highs? Yes. BMNR is high beta, Ethereum is high beta. Having certainty in the geopolitics would make the market go risk on, and as a result, high beta names will climb. Am I writing cash secured puts, or is it still too volatile? I mean, I'm in margin right now, so I'm not doing, I still have cash secured puts regardless on SoFi at $20 and also at $16 for May. So those are the only ones that I have right now, but until I get out of margin, I'm not going to be writing any more cash secured puts right now. So I have covered calls on, and if they get hit, they get hit, and I just restart the process again. Is Oracle still getting TikTok or what?
I haven't heard about that in a while. I actually kind of forgot about it.
Yep. Do you think we'll get significant news on Galileo deal with Citi or Truist at earnings? Probably not.
No.
New video on air coming soon, Roy?
I'm not sure if it'll be this week or not, but I need to do one on the Ultra Bowl case. And well, I have two different air videos, but that's one of them. And just like more so than the price target, what it would actually take to get there, why we haven't really seen that yet. Although there are some indicators, but yeah. Like how high can we actually go? And I'll just say it. We could triple this year, but things would have to go like absolutely perfectly. So that's not going to happen realistically. I mean, it could, but it's very low percent.
I mean, this is the perfect time to talk about the Ultra Bull case because excitement for air is all-time highs along with our stock price.
Yeah, that thumbnail will be fun. Air. Well, it's 200. Did I put it out there before? Yeah, maybe I didn't. It's in the 200s. I'll just say that.
Yeah. Oracle owns 15% of TikTok US. Yes. You guys going to do a live stream with earnings with Mr. Tanner Manson? Probably. If he's not, if he'll do it with us, if he's not too big time for us, we'll definitely do it with him. So,
yeah.
Yeah.
I'm sure that we'll be able to do that. So,
yeah, we got to figure that out. Will BMNR break 23 this week? I mean, we're at 2250 as of after hours, so yes.
Why not?
Yeah, exactly. When are you looking to buy more Nebius? When it falls under 100, or even like under 110, under 100, around that range.
Yeah. I'd love it at 100. That would be so awesome, but might not happen.
I mean, even at 100, I'd be like averaging up. So I'm probably not. It's not going to be like first of on the list. But should I sell my Nebius for PayPal? No.
Depends on your investment goals, time horizons, and what you believe in PayPal. I wouldn't.
Yeah, this is not financial advice, but hell no, I wouldn't do that.
In fact, Tevis, my Nebius position was largely created by exiting hymns. All that money went to Nebius, and that wasn't enough Nebius for me. And I had a chunk of PayPal money sitting there too. I'm like, hey, I'm going to put this in Nebius as well. So I did the opposite.
Yeah. Kay Levine, thank you for the $5. Can Anthropic really dethrone Microsoft as the king of enterprise? I doubt it. Either of you give any thoughts on this?
Yeah, they can make inroads. They can hurt Microsoft in two different ways, but it's not like a full weight hurt. So first is the compression as far as number of seats that are there for a lot of these businesses. A lot of the contracts, and Microsoft is no exception, it's seat-based revenue. And so if we see 3, 4, 5 years out, that there is some compression as far as employee count, which I think will happen. I think it's a little bit overstated oftentimes without the robotics driver in the back end. That means that they either need to change their model, which nobody likes, and that would be bearish for Microsoft, or they instead just take some compression. Now, the nice thing is, again, they have Azure. They have investment in OpenAI, which isn't not as high quality as Anthropic. There are products that Anthropic that you can build and you can do and design and make work for you with Anthropic, and that's great. I really do think that Microsoft will eventually get Copilot right. There are some indicators that they are. It's been a weak offer, but Satya, I mean, like 2 years ago, most people would have said maybe the top 2 CEOs in the world were Satya Nadella and Jensen Huang. Now he's kind of forgotten, and he's a great CEO. So I wouldn't bet against them. I think that they'll make Copilot work, and they already have the distribution channels right there. So I would say no, they can't. Plus, the other factor is, like, even if you're a guy like Steve or like Tevis that are very comfortable with vibe coding, there's more. If you're doing it for individual usage or your small business, fine, that's great. if you're actually building something to operate in an enterprise environment, there's a lot that goes into that, and you don't want to get into a mess, or few businesses, I will say, of any size, don't want to get into a mess where nobody really understands the code. That's been a problem in the past for a lot of organizations where they have just a few guys that design the code that understand it well, and then those guys are indispensable. I don't think they want to make that mistake with Anthropic to the point where they vibe code and they don't understand the code. It's so far beyond their in-house capabilities. Every organization of any size does have a team of software engineers that's there, but a lot of companies are not in the business of creating and designing software. And I think that they'd rather continue to use enterprise grade products like the ServiceNows, like the Microsoft, than just wholesale, outside of a few instances, shift that to Anthropic. I could be wrong, but that's my thoughts on it right now.
Dr. Roy, when are we getting out of crypto winter from your point of view? What are the catalysts that gets us out?
I still think the 4-year cycle is probably not dead. There are some that think that it is, and we will have, in the middle of this crypto winter, relief rallies. That's probably what this is right now. Ultimately, it just takes time. Usually, before the end of crypto winter, you see a lot of pessimism and a lot of people saying crypto is a scam, like more so than usual, and that Bitcoin, or even bulls that are just like, yeah, Bitcoin, Ethereum, and these other crypto projects, they're just going to kind of sit still for a while. There's better opportunities elsewhere. That's usually the time to load up the boat and get excited about crypto, because just like when we were a year ago and there were people saying this 4-year cycle is broken, there's going to be no more crypto winners, this time is different. Crypto has a way of humbling even the best. So I would think that we're probably going to bottom before then. But given the typical cycle and seasonality effects of September being very bearish for crypto, usually there are exceptions, and midterm elections, we're at a crypto winter before the end of the year. Probably that last quarter will be very good for crypto and crypto adjacent names, including Robinhood. I think Robinhood's going to do very well, and a lot of fintechs will as well. But we have some time between now and then. This summer, probably late June, early July, that's when I'm probably going to start DCAing into those crypto names that I want more exposure to. That just could be wrong. Would love to be wrong and have that happen earlier. I got a lot of crypto exposure even right now.
This is true. Some would even call me overexposed to BMNR. So we'll see. Still going. I think we are going to get ready to wrap up shortly. Neither of us own Zeta. It's going to be interesting to see what this earnings brings for the companies that we're following. I'm sure it's going to be an interesting one. Anything more to add there, Roy, or shall we call it there? What do you think?
I'll add a non-financial advice thing, but if you're uncertain, and I don't think anybody's like super certain what the market's going to do over the short term, two kind of contradicting pieces of advice from some of the greats. Time in the market beats timing the market. And there can be a tendency, and I've seen some people do this, and it can work out well. I'm not saying it can't, to try to guess what's going to happen in the market. Today is a great reminder of like how hard that is. And this year, I don't think there's a single person that's trying to guess what the market does that hasn't missed it a whole bunch of times. It's tough. The best thing to do for most of us in retail, and what I try to do, is just invest in high quality companies over the long term. If the thesis changes or something, I reserve the right to change my mind, but I'm not going to just like sell all my NVIDIA because I'm like, hey, the market might do really bad over the next 6 months and go down 10%. It might. I'll just continue to hold NVIDIA. It's going to be in a great place in 5 years. The other is when you've been in some chop, you begin to see some green. If while we were falling down, you're like, boy, I really don't like this position that I'm in, and you're waiting for it to get back to break even or whatever, these relief rallies, and it could be that we're well on the way to an all-time high, are usually excellent times to rebalance your portfolio if there's something that you wanted to get more than what's rallying. So don't be afraid to do that. I just be careful about getting all the way in or all the way out, but it's okay to cut some losses, to invest in things that you think are just no brainers. And like we've done this already, Tevis. You and I both did with HIMS. That
Yeah.
money, I don't know which specifically you allocated in, but pretty much everything that you bought has outperformed that. For myself, HIMS and PayPal, heavy investments in VG, in Nebius, and in Air, those have done well. So
Yep.
don't be afraid, but yeah, just don't be afraid.
Yeah. Great place to close. Thank you, everybody, so much for being here. Thank you, Highland, for the pizza money. We are on Monday this week, but next week we'll be back. Hopefully on Tuesday. If not, then we'll definitely let you guys know if we change the schedule. But you'll definitely see us on Friday at 6 p.m. for the Ron and Travis Fiesta Friday to wrap up this week. And we'll see how it actually does wrap up. Follow Roy for more content. I'm going to try to put some stuff out this week. Thank you all again. See ya. Have a good night.